Well, good day, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday evening, and we are here now on, where are we now? We're on the 13th of July, 13th of July, 2023, 6:15 p.m. Central Time. So now you just watch and you have to see what's going on and where the markets are going to do what and so on. Let's step one step back and understand what went on. This market took off because of several things. Number one, what was the jobs report going to be? If you knew that, terrific. If you positioned yourself that you were going to be bullish and you went through it, great. Would I have? No. Would I have positioned myself bearish? No. Do I go through major reports and futures? No. Would I hold positions in stocks and other vehicles? Yes. Different type of trade. This is 90% leverage. You've got to be careful in the futures markets. And that caution is told me when there's a big report, and this jobs report was a big report, you step back. Number two, CPI data just on Wednesday, yesterday, said, hey, CPI is falling. Not nowhere near the 2% the Fed wants, but it lost a half a point. You keep losing half a point here, half a point there, you're suddenly at 2%. Market like that, another accelerant for the move up in the stock market. Number three, we got the PPI today, and it came in up 0.1. Now, they were only looking for 0.2, but it's still only up 1. So I guess if it goes negative, people will say we have deflation at the wholesale end of businesses. Okay, how does the market like that? Oh, it loves it. Do things grow to the sky? No. Will this market run its course because you've got the rush of money coming in? Yes, it will run its course. Will you get a correction? Yes, you will get corrections. Do I know when? No. Do I care when? Well, I always care, but I'm not in the business of predicting the day, the hour it's going to begin a correction and peak out. Rather, I look at the charts for high probability opportunities. And no, I'm not left alone on that. There are other people doing the exact same thing. Now, what we do have is you're back to $81 in the Brent. We are watching OPEC. The IEA came out today, and everybody's giving their projections as to where you're at. But there's a common theme to this. The theme is that the market's going to go into shorter supplies in the second part of the year. That is the theme. Russia will be a bigger oil producer now than Saudi Arabia. It's the first time that's happening. Supposedly, Russians have cut 600,000 barrels a day, according to the IEA report that I read today. I don't believe it, but they say it did happen. And okay, why wouldn't I believe them? I have to. I think they're an independent body. And now we start looking at demand, which they think will be solid in the second half of this year and next year, 2024. So you're putting a floor in this market. Add to that, the U.S. is going to be buying stockpiles. Add to that, production isn't going to go materially higher by non-OPEC members. Maybe up another overall 1 million barrels a day is what I was reading, so we'll see. But then they're going to lose other production. Libya, for example, I don't know if you're aware of it, but 2 wells are now being shut down. They're big boy ones. And that's a problem. You know, Libya is a major oil producer. They have civil war there, and they can't get anything done is the problem. But they have plenty of oil reserves. They just can't get anything and keep it undone as the country's been in strife since Gaddafi is gone. When I take a look at what's going on with the S&P, well, you're getting new moves. Are you going to go for this high? I mean, that's what you have to be asking yourself. I remember doubting the market right here. You know, people don't talk about that. I was one of the guys that didn't see this coming. Okay. Was I bearish along the way? Absolutely not. You know that if you follow me, if you're a paid subscriber of mine, we were trading the long side of this market and have been trading it. Why? Because I pay attention. You have upside bias. As long as you're over that 18-week average, you're bullish. That's your bias. You do the same thing on the dailies. This market has not been acting bearish. This market is bullish. You've got a pattern right now without a trend. You have a higher high, lower low. But you've had trends along the way. You've had moves up. You get a correction. You start it again. It's a ratchet type market. That's what it's been doing. Again, I'm going to argue. This is what I hang by. If I'm coming out with a new trade that isn't based on embedded readings on the slow stochastic, this is what I'm hanging my hat on. When the market is over the 18-day average, I have to have a bullish bias. I could get sell signals in here. I cannot take them the way that I teach the charting. I can only take the buy signals. It's kept my clients in good stead. That's the way that I'll call it. Where's the resistance here? Would I stop because you've decided or the market has decided it's a runaway to give up the fact that you only trade over the Bollinger Band 5% of the time or under it 5%? That's what you're at. The combination. Well, as you get up to it, that's where the resistance is. You buy it. I wish you the best with it. I wouldn't touch it. Are you embedded? You are not. So I have an overbought market that has exploded. No question about it, off of two large reports, and it could have gone either way. I realized it. Traders that took the guts of it, they did well. Will they cash out well is the big question. When we step to the NASDAQ, my eye goes to overbought. Sideways market that's trying now 3 days in a row to push the Bollinger Band and see if they can shove it higher. Would you buy a Bollinger Band? You might. I would teach my clients never to do that. You're caught in a trading pattern in the Dow, from the up to the down to the up. In other words, back and forth between upper and lower Bollinger Band and void of trend the whole time. Higher highs, then a lower and low with a higher high, back and forth. And in the process, you've gotten overbought. In the Russell, the Johnny-come-lately trade, hey, this thing's been left behind. It's going to join the parade. Well, they're buying this. Now, this is becoming what's called a gorilla glue trade. Let me tell you how I name that. It's when every day the market hits the Bollinger Band after 3 days and it just keeps staying on it. There's no way to tell how high the market wants to go because it's feeding off of a mixture of the Johnny-come-latelys buying and short covering. Somebody, for every long, there's a short in futures. And that's what is going on. Wherever it ends, it ends. Have I seen all this before? I've been to these rodeos, plural, many times in my 50 years. Do I chase them? Never. Did I used to early in my career? Did I do well? I got killed. Why was I always buying the high when I look back 3-4 days? I just won't get involved. I'll let other people. In the bond market, okay, we've come up now. This is the last rally high. I haven't taken it out. But it's a heck of a rally, and what's it saying? It is saying, no, we have probably seen the worst in the 20, 30-year Treasury instruments. That's what it is screaming. We'll see if it does more. On the short term, look at where you took this 5-year, the 2-year did the same type of thing. You came down from an extreme. Why was it an extreme? This was going into the jobs data. This was coming into the CPI. Without counting tonight, 1, 2, 3 days, 4, 5. Got it? This is where your jobs report is. Then we had 2 days of waiting. Then we got the CPI, the PPI. I hope you get what I'm explaining to you. So you had a complete radical change on the jobs report that got people thinking different. That's material. You can mark it down on your chart, whatever you want. It's material. This is the big short covering, people repositioning. I don't know about that. I think it's more short covering than anything else. And in the dollar index, it's the same thing. The dollar got a message that no, the Fed is not going to keep going on interest rates. I know there's still people that think that. I'm not one of them, but I need the data to prove me right before the September meeting. I think they go now. That would be another surprise if they don't raise the 25 basis points. I don't think there's enough data here for that to be no. Forget that Elizabeth Warren and other Congress people are coming out. First off, the Fed's supposed to be independent. Number two, you're far away from 2% inflation. Nail the coffin shut and sit back. The other school of thought that thinks I'm wrong, Ira, it's nailed. The market's coming down. We don't have to kill it. They can pause and say it's a pause and do nothing right here. I understand both schools of thought. Either way, you're coming down. Maybe an hour and a half ago, I was talking with Gordon Linn, who founded the company. I'm with Linn Associates, and Gordy and I grew up in the business together, so to speak. He's a few years older than me, but he's a great market technician. And we're sitting here talking about the markets, and we were on the phone a good 30, 40 minutes about it. And we're talking the dollar index. And the first zone, we're getting to it. If you use what's called price counts, and we offer them to clients, talk to one of my reps. They'll get you set up on it. This is your first objective. Then you have another series here and one under the 95. So the big trend is still down, but you're approaching profit first objectives. All a price count tells you is where a market might go once it sets in. But that's very important because the highest probability is the first objective. And we have a course on it. I created the course. So if you're interested, talk to my staff. They will get you things that you need. In the eurocurrency, lower and low, higher highs. You can see how the market is coming right through here. Okay, what do I think? Overbought. Would I tell you to ever buy over a Bollinger Band? No. Why is this happening? I just gave you the reasons. It's the exact same story. Now, they're going to continue raising rates for a bit longer than the U.S. Their inflation's more embedded, and the Brits have even a bigger problem. And this is called that gorilla glue trade. It's every day you're at or above the upper Bollinger Band. Now, you're not closing day after day over it. You rarely get 5 days in a row, more than 5 days in a row of a close over a Bollinger Band. Very rare. But this is not a sign of weakness. It is a sign of immense strength. And on pullbacks, there will be waiting buyers as people bail out and they bought too high, especially if you get an embedded reading. At least that's what I think. Do I know? I don't know. I can tell you I've seen this pattern. Take the name off the chart. I've seen this rodeo. That's generally what happens. Bitcoin had a great piece of news. Ripple won a case against the SEC today, a very important case. The gist of it is that if a firm goes out and tells a sophisticated trader to do something in a coin, then it's a security. But if you're just trading on your own, nobody's prodding you to do anything, and you're trading Ripple on an exchange, that is not a security. That was the first ruling. I've given you the gist of it. Will it be challenged? Most likely. Where's it going to go? I don't know. But immediately you're getting other exchanges saying, well, now I'm going to be able to list other markets that I was fearful of because they're not securities. I wish the law were that simple. This is a definitive win for the crypto industry. Will it hold up if it's challenged is the big question. We then get to Brent versus WTI. And as you can see, the market is underneath the 18-day average of closes. That means what's going on? It means that WTI is stronger than this. Now, we have cleared some important levels, and it's been doing it on a systematic way. It's not just running through them. It's working up. What else? What kind of trade would you call this? Remember what we just used that word, the glue trade, the gorilla glue? Take a look. Each day, you had more than 3 days in a row, and you just keep hitting that number. At the same time, you're embedded. You don't fight that. What it's saying is on the first good break, the buyers are going to be waiting to pick up pieces as traders go, I overstayed my hand, blah, blah, blah. This is not a sign of weakness. I don't think you're just going to top out on this. It's the same thing on WTI. The gorilla glue trade is a powerful trade. It wasn't created by the jobs report of the CPI. It was created by the promise of reduced oil production going now through August, and Russia complying with it, and maybe some others. So we will see how far it can go. Don't fight it. This just latched on, and now it's embedded. Very important trades. Gasoline's doing the same thing. Why it didn't do it in front of July 4th, I don't know. But it's deciding to do it now. Now, is it embedded yet? You cannot count tonight because we don't know where it'll finish. So Thursday has action with both numbers over 80. The same thing on Wednesday, but it won't be that way the day before. So tomorrow's an important day. Do we get a correction and not embed, or do we embed? Where you finish on the day's range is going to be very important tomorrow. If you drop and you stay embedded, but barely, and then you're near the bottom, you're going to lose the embedded out Sunday night, Monday. So I pay close attention. You're in my area now of expertise. I feel like I won $1 million. I have been telling you on this market, I said, you got all this heat, and you're not rallying in natural gas, when you get bullish news and the market doesn't respond, you got a problem. The market's acting very bearish. Well, now you're into the zone of profits for the bears. You're already oversold. Some of them will start moving between here and the Bollinger Band is my guess. They're not going to get bullish, but they're going to take money off the table. You're going to hit in Phoenix, Las Vegas, near 118, 120 degrees. I was watching tonight on national news. They took out and they were measuring the street temperature. You know, you can shoot one of those guns at it to see. 162 degrees just hours ago. You can't walk on that. I lived in Phoenix. I went to college there. You have no idea what heat is. I went there one summer. I never went to summer school again. You can't breathe. The heat is that severe. And I know people say, oh, Ira, it's dry, you're blah, blah. People are dying in the street, my friends. 110, 115, 120 degrees is a big amount of heat for a guy like me. Okay, so that's where you put it together. Now, one of the things you're going to use, I hope you want to use, especially now, next few days, are pivot points. Why? When markets get stretched out, pivot points have a way of coming into play and helping you with entry and exit points and hit and run. They're only for in and out the same day. They are not a position trade tool. They are an in and out tool. I use them if I'm looking for a spot where I'm going, should I put out a special update for my subscribers? I'm looking to sell. There it is. I got what I needed out of it. I explain how to do this along with the stochastics, which is different than other people would use on it. My version of stochastics, by the way, in a 3-part video series. It's yours free, by the way. I go through it step by step, tell you how to set up your charts, tell you how I'm setting it up and what I'm looking for and how I'm doing the timing. So if you'd like to get it, IraEpstein.com, free offers. Click up here, same way. Call my staff. Take advantage. I'm Ira. You have yourself a great day. I'll see you tomorrow.